Hi friends, the Q3 FY22 result season is finally over, and oh boy, what a result season it has been. While the inflation has dented revenue growth and margin of sectors such as consumer durables, chemicals, pharma, cement and tire sectors such as textiles, engineering, metals, logistics, IT, tourism, energy and BFSI did well. Talking about BFSI, I must mention the results of the NBFC sector in particular. NBFC sector saw a quick recovery from the second wave of COVID-19 as the asset quality parameters stood resilient. For NBFCs, demand continues to improve notably across product segments such as mortgages, vehicle finance, SME, personal loans and B2C consumer finance. The new non-performing loans during Q3 FY22 was at a multi-quarter low. Non-performing loans for vehicle financiers was very low owing to the tighter underwriting standards, upgrades and recoveries from temporary non-performing loans that occurred during the second wave of COVID-19. Microfinance players saw improving asset quality trends with the overdue book declining. With the non-performing loans expected to improve going forward and the non-performing loan cycle turning around, NBFCs will need to make lower provisions which will lead to more profits. Although the sector might still take a couple of more quarters to get back on its feet and above the pre-COVID levels, the higher loan disbursements and better NIM margin would aid the growth of the sector. Not all is well for gold financiers like Muthoot and Manappuram. They faced a tough quarter as the gold auction by companies surged manyfold in the quarter ended December due to defaults by customers who had pawned their household gold jewelry to borrow money to restart their businesses after the first wave of COVID-19. While Muthoot will face one more quarter of tepid growth owing to lower demand for gold loans, Manappuram can witness decline in its return on equity due to lower yield affected temporarily due to shift from high yield to low yielding gold loans, coupled with aggressive marketing spends and efforts. NBFC sector has been through terrible bad luck with a string of events following one after the other. First, the IL&FS crisis, then the Excel load norms impacting vehicle financiers, followed by sluggish home sales affecting housing finance companies, and then COVID waves. During these times, the sector stood resilient with higher provisions for loan losses, focusing on collection, reducing short-term borrowing, and raising equity capital. The sector should see healthy growth and a normalized return on equity in FY23. Key monitorable would be the interest rate hikes by Fed, as typically higher interest rates can lead to money flowing into higher yield investments and out of gold. Valuations for most of the stocks in this sector are below 5-year averages and some are even below -1 standard deviation. Informed investors should look at investing in the sector as the worst seems to be over and the sector is poised for a revival. Our team at Sharekhan Education has researched 2 stock ideas, Mahindra & Mahindra Financial Services and Chola Mandalam Finance Company Limited. In the follow-up video, we'll discuss a brief on these stocks. This is Viral Shah signing off. Happy investing. We do not give any recommendations or financial advice. We request that the investors please consult their financial advisors or do their own research before investing.